Dhirendra, thank you so much for joining me. So, the context for today is really the record SIP flows that we've seen for the last month, which is over 16,000 crores, which is atop a previous record the previous month. So, in a very broad sense, why is this happening?
The very nature of SIP is accumulative. It is not a one-off trend. Ideally, I would expect that, SIP should always be a record. There will be little more people investing than the previous month and it will be a record. And unless, there are too many expiry. So there are many reasons for that. In fact, the mainstreaming of mutual fund, the mainstreaming of mutual fund SIP, and it has been not a disappointing market for anybody who has come in the last 4 or 5 years. In fact, mutual fund is the only market-linked financial product which has a lot of happy customers. I can't think of anything else which is which can claim that we have 10 million happy customers. We have 15 million happy customers. And this is a matter of measurement. The fund companies can actually look at the flows and see that how much return they have generated. So all of it combined together, and there is nothing more powerful than having more money and a lot of investors experiencing it. The word of mouth is way too strong.
Right. So, the fundamental reasons are pretty sound. So, let's look at the other side of it. So, this means that there's a lot of money coming in, 250,000 crore, according to some mutual fund asset managers. And I'm sure the numbers add up, which is effectively just sloshing around. And we're also at a plateau of sorts right now. So, how does that equation square up?
I don't know. It's very difficult to guess the market. And I think every time somebody has tried to guess it, they get it wrong. And in the last 32 years, I've been watching mutual funds. Any fund manager actually goes very strongly about guessing the state of the market and trying to time it. He loses his job before the next cycle. So it gets so embarrassing. I would not like to hazard a guess here, but it's very straightforward. I found this. It is actually a behavioral thing. When a lot of people, earlier people used to invest in a seasonal way. If you look at the 90s, people invested in Morgan Stanley, people invested in Master Gain. The scale of Master Gain 30 years back was something like it raised 6,500 crore approximately. No, sorry, 4,800 crore or so. And if I adjust it with the level of the Sensex, that same scale of money will be nearly 1,30,000 crore of NFO money. It was a closed-end fund. Of course, the times were different and that was the only way for investors to participate. But no, the point I'm making is that investors used to come in a very ad hoc way, seasonal way. Mutual fund turned out to be, for initial years, turned out to be the only convenient way for individual investors to come to the market. And they used to be closed-end fund, or even if they used to be open-end fund, it was not the mainstreaming of SIP. The SIP, if you had to do your SIP, you had to cut 12 checks, give post-dated checks. It was cumbersome. I think the development of the ecosystem, the ease of investing, happy customers, democratization of the market, there are many things going for mutual fund. So once the investors are investing through SIP, they are behaving in a very contrarian way. People are doing their 5,000, 10,000, 50,000 rupees SIP and they keep 1 lakh, 2 lakh rupee handy so that if the market corrects, they will invest like that. So I haven't come across a situation except for 2008, which is now quite some time, many years back, that investors went out in hordes. It was very unnerving. Market went down from, something like 20,000 levels on the Sensex to 8,500 in a very brief period of time. But that also was recovered in next 3 years. Of course, it was long. It was recovered. But that was the only phase when I remember investors were taking out money as if, the market is going to end, not collapse.
Therefore, you're saying that even if there seems to be a lot of cash with asset managers today, and this in itself could be, of course, a frequent phenomenon, the absolute numbers or the fact that they're holding on to so much in relation to where the market is or its ability to absorb so much is really not in a macro sense a problem, because this is something that we've encountered.
No, it is a problem. And that is why they're sitting. They are not finding it attractive to deploy the money. And despite the supply getting, rising supply, or I don't think there's a good supply of quality stocks. And that is actually translating into, all these BAP stocks and, things are buy at any price and things look not very comforting. But most of the problems get resolved by, like in a business, if you have a robust revenue, many other small problems get resolved. Likewise, in the stock market, If earnings grow rapidly, it's not growing rapidly, but it's growing reasonably okay. And that earnings itself can justify all this deployment, and people can look back and at the hindsight that, and they will regret that they did not invest. And that is what we have seen in the recent past. In last 6 quarters, market were looking far more expensive than today.
Right, Dhirendra, thank you so much for joining me.